Welcome back, folks. You're looking at a chart of gold on a 15-minute chart. Yesterday, we identified a key level. 2391 was a key level for us that we had identified. Now, I calculated that level from this early Asia manipulation, okay? So if I take the high down to this low, and I'll just project this up. Was it that one? Let me double check. It might have been. Yes, that's the one, okay? So using the Asia manipulation, okay, I forecasted a level that we should come into, which is this level here, 2391, okay? That aligned with some bearish signatures that I had spoken about in previous videos, so go check it out. Now you can see that the open of Asia, open of New York, 7 a.m., we did get a reaction from that. You can also see London consolidated, and I mentioned in my video yesterday that I would not be trading London, I'd only be trading New York, and I mentioned that I'd only really be trading at the time the news opens up, okay? Now, you can see here, London consolidated, we didn't go above that 2391 calculated target. New York opened up, and there was a trade here. I didn't take it, okay? I didn't really have a setup on my setups, but there was a pump and a dump, okay, in that first hour of New York. I think that would have yielded around about 50 pips or so, which is all we really need, okay? But I just didn't like the setup, nor was I really going to be trading in that time. I mentioned I was going to trade at 9:30 or 10 a.m. Now, after that, basically, which was just a, taking liquidity, taking people down in the wrong direction, we got this move up early on in the New York session, right? So that 9 a.m., 9:30, we took out these highs, okay? So after taking out those highs, we had a rejection up here, which was basically taking up all this liquidity here and then into this gap, okay? So there was a trade there. Again, I didn't take this trade, okay? That was a nice setup at the right time, 9:30, right? That's a time where we would expect a high to be made for New York. So there was definitely a setup there that one could have taken, targeting these lows, okay? I did not take that trade either, right? I just didn't like the fact that we'd made significant movement up at early New York and kind of were above this 2391 level, which was for me the highs that I was expecting to be left intact, okay? But there was a trade to the downside, very choppy, you can see, up, down, it's just very choppy, a lot of wicks up and down, and then in the afternoon session with another news release, I didn't check the calendar, but I'm assuming this was a news release, the market went a lot higher, okay? So there were trades there, setups, but as I said in my previous video, you got to know your setups, right? So early 7 a.m. to 8 a.m., there was a easy, well, I won't say easy, I haven't, there's a 50 or 30 or 40 pip move there you could have taken, but this one was an easy trade to the downside, okay? This is the right time, 9:30 candle, taking out the highs, coming into a fair value gap on the left, you can have a look at that, 50-minute chart, okay? And that's taking out these lows here. So there was definitely a trade that one could have taken targeting these lows. That was a nice 60, 70, 80 pips, okay? But all you need is 50 pips. I didn't take that trade, I didn't trade at all in that New York session. I just wasn't happy with what I was seeing on the charts, okay? I mentioned that you've got to be careful on these news days. So there's going to be a lot of volatility, okay? So they were trying to manipulate throughout the day. They had indicating a short that should have continued down. It didn't. Immediately came back up at 9:30. Short should have continued all the way down to whatever lows were made early in the day. That was obviously another manipulation, okay? So news days are always going to be heavily volatile, and you just got to know your levels, understand your setup, know what you're looking for, okay? So now on a higher time frame, if I look at an hourly chart, we have come into some key levels again. This is basically where this current entire move down has started from, okay? And so these are your bearish order blocks, okay? This is probably a lot cleaner on a 4-hourly chart. If I look at a 4-hourly chart, then we've come into a bearish order block, okay? And this down candle prior to this up move and then the commencement of this down move is the level. So they've had a down, they go up, straight down, and I've mentioned this in the past, this down candle that started this entire move, the market needs to come back up to that level to mitigate. Okay, so this is now coming to a very key level where the entire move started, where this candle that initiated the move is down to go up and then down, right? We've got to come back up to this down candle at some point in the future to mitigate, which is what we've done yesterday, and they've used the news as a catalyst to move the market up there, okay? So now I would expect from this zone, and this is why I have mentioned throughout my videos last week that I'm really not looking for shorts, right? And I was looking at 2440, okay? And that's why you can see we haven't really gone down. Right, we haven't really gone down at all. So this could still be, if I put a line here that we've come into this down candle, we haven't yet, but we could see a reaction that there, order block for our chart, we could see a reaction from there to go higher and finally tap out this 2440. Okay, that's very possible. Okay, so this also could come down. Okay, because this is the move going down, this is the pullback into this mitigation block, and then we continue the move down, okay? So we kind of need to see what happens in New York. I am short already, okay, in early Asia, so I'll be journaling this trade. I'm going to take that off this line, don't need this now. So I'm just monitoring it. This is a pretty significant pump up, so there needs to be some level of balancing, okay? These are the New York lows, okay? So I think it's very possible that we get down here, based on what I see here. This is quite a significant pump up, and these, if I was a market maker, we've come into a key higher time frame objective to mitigate that 4 hourly down candle, okay? And then if we look at this from a higher time frame perspective, we've been going down, pullback, down. I do believe this is a mitigation and back down. Now, that doesn't mean we go all the way down. We certainly could. I'm only looking for scalp trade shorts. That's all I'm doing. I'm not looking for big movements down, okay? I do feel there is a possibility that we take out these lows here under New York. So I'm going to be watching the market. For now, I'm only looking for a scalp trade down in my current shorts, okay, maybe 100 pips, okay, down to maybe 2398. From where I've shorted. 930 is key. I've shorted before 930, but for Asia, 930 is key. So we still may have a bit of a pullback up. I'll just add to my position. Okay, I am looking for at least a move down to 2398 levels, but we may continue lower and take out the liquidity that's residing under the New York lows. Okay, so you've got to monitor the market. As I said, you've got to know your setups. What do you need to see that tells you that's your short setup or your long setup? Okay, you've got to understand price action. What's the price showing you? What's it indicating, right? And this all comes as practice. Okay, so I hope this video was useful. Monitor the market. I'm looking for a movement down at the moment to 2398, and then I'll do an assessment. I do like these lows here under New York. Okay, so with this move up, because see, when you have movement like this straight up, okay, that indicates a pump up. Okay, where the market's getting people to long, all the bracket traders were long, and to me, this is a very high probability to be a manipulation move. Very equal lows down here, okay, at the low of New York. Now, to be profitable, I don't need to wait for all of that, okay? I know the market needs to come down to offer some level of efficient price delivery. That's all I need to know. It's coming to a key level, so you've got to know your levels, okay? I'm happy to short down to a level where I feel the market needs to rebalance, okay? This is a pretty significant fair value gap, okay? Usually what I would do is I would take the midpoint of that, okay? And I would target the midpoint. And I can see that there are some levels, like this high here is within that gap and it's very close to the midpoint. So I've just targeted that high, okay? That move down is enough. I've shorted somewhere up here. I shorted at 9 a.m. at the new hour, okay? 9 a.m. was after seeing these, let me make this bigger, okay? So I've seen that there, as we've moved down, there's a small little fair value gap and moved into it. And this is 9 a.m. Okay, so I kind of understand price action quite well. Okay, to know that first we come down, take out liquidity. Okay, a lot of people are going to take that as a long. All we're doing is coming back and pulling back into these up candles. Okay, essentially that is the bearish order block. Okay, they are simply going up to mitigate this little gap here. Okay, so that's the mitigation there. That comes down, takes that liquidity. We go up. There's a small gap on a smaller time frame here. That comes up there, balances that. 9 a.m. I've shorted. We've gone down. I'm expecting a move down. Okay, that's why I've shorted. I'm not just shorting randomly. I'm expecting that this market needs to go down after coming into a high time frame level here. Okay, which is, if I go back to the hourly chart, that high time frame objective is these order blocks, and in particular these two down candles, which is the bearish breaker. Okay, we've come into the bearish breaker on a high time frame hourly chart that had this big move down. Okay, and coming to mitigate on a 4 hourly chart. So there's a lot of things going on there. Okay, so this is not just a random short. Okay, on a 4 hourly chart, there's a level that I know the market needs to come back down to and mitigate. We've come right into that blue box, which is that down candle. Right, on an hourly chart, that is bearish order blocks, breaking structure. Right, this is swing low. Okay, and this here, these two down candles are the bearish breaker. We've come into that. So this box that I've drawn is key. It's a 4 hourly mitigation block. It's a 1 hourly bearish breaker. Okay, so we've come into there yesterday, and I waited for the next session to commence, which is Asia. Okay, and I've shorted after looking at what's going on at 9 p.m., which is the second hour of Asia. Now, I know from experience that there may be a bit of a pullback, right, at 9:30 p.m., where I'm looking to add the fair value gap here as well. Okay, so 9:30 p.m., the market will most likely move up, coming to this fair value back, and I'm looking to add, or might even go higher into this zone again, well, which I'll add as well. Okay, notice that it's created, these equal lows here. Okay, all these things kind of tell me we're going down. I know we need to go down to balance this massive pump up. Okay, so there are a few of the reasons for why I've shorted this market. I am looking for a move below the New York lows. Okay, I do believe that'll be the next draw on liquidity. I think we will get a reaction from this level, which is where I'm going to take off my shorts. That'll be my Asia trade. London may go back up, back into the zone, chop around, or if start to come down, and then we'll see what happens in New York. New York, 9:30 a.m. is going to be the key time, okay, to really trade this market. Now, it's another heavy news day, so I don't have the news here right now on any of my browsers, so that's okay. Have a look at the news day, but there's a lot of news. Let me see if I can find it on another. Let me see if I can bring it up. Okay, so there's the news. It's Wednesday today. I'm not really concerned about the European news, USD news at the start of New York, so 8:15 a.m., okay, and again at 10 a.m. So that time between the entire New York session is going to be very volatile. Okay, that's where I want to basically. That's where the majority of that's where I want to be looking to trade gold. But I will take these scalp trades. That's also where I think direction will be a lot clearer. Okay, so right now I'm looking for scalp trade short. down to this level from that zone I've mentioned. And I do believe the New York lows will be the drawn liquidity for today. Okay, hope that video was useful. I will now talk with you in a future video.